Welcome, everyone. Welcome. I'm so glad you can join me here today on this important webinar, How to Succeed in Real Estate in 2024. So now, if you don't know me, my name's Agostino. I've been investing in real estate for, God, almost 20 years at this point. It sounds crazy when you say it out loud. Now, I've seen my shares of up and down markets, and it certainly can be a trying time whenever those types of downturns happen, and we're in one right now. But I can tell you that there's certain ways of first preparing for it, visualizing the cycle ahead of time, okay, which obviously might be a little late right now, but there's still ways of positioning yourself to prepare for what's coming next, okay? So what I'm going to do today is provide you with some knowledge and strategies so you can thrive in 2024. So before we dive in, let's do a quick level set on what the current state of the market is. Now, I'm sure you're all aware the economy is in terrible state here. It's inflation's running rampant. We're printing off money like crazy, setting them all off to all these different places. Okay, interest rates are climbing up way faster than anticipated. We have to again think about, for the most part, like maybe 15 years ago, interest rates were 7%. That was the norm. We got accustomed to a super low interest rate environment, right? But the rates today are scary. Recession is looming. If not, it's already here. It just depends on how you feel about it and what the election cycle says, I suppose, right? But all things right now look pretty bleak. Let's just call it what it is. But there is a silver lining. Economic cycles are just that. They are cycles. They come and they go. So while times are tough right now, the winds of change will eventually shift and new opportunities will emerge. My goal today is to explain to you how you can capitalize on the current real estate cycle so that you're poised for success when the recovery starts. Okay, so a big part of it is really training, studying, learning all the things you need to know today so you're prepared to, like I say, I don't want to use the term take advantage because it sounds really bad when you say it out loud, right? The way I like to look at it is you're helping someone out of a terrible situation, right? Usually what happens is someone gets into a bad deal, they overpay for the deal, whatever the case may be. By you taking that deal off their hands, you're helping them out, you're reducing the stress off their life, you're helping them, you're helping their family, right? It's one way to look at it. In the case of a bank, they're taking on this an asset that they just don't want to have. You're able to get a good deal on it. Great. You can do that too. There's various ways of looking at it, right? It's not about being a jerk or anything else like that. It's about trying to help out other people is really what it comes down to. Okay, so that's the way I like to look at it here. So I'll tell you a little bit about me first before we get into it here. So like I said, I've been in real estate for a little bit now. I started doing small multifamily, small single family type of stuff almost 20 years ago at this point, and started really growing the business. It wasn't though until about, 6 years ago, 5 years ago, when I made a decision in my mind to focus on made commercial where I wanted to be. So with that, I really started learning and training on how to do commercial type deals and ended up expanding and growing the business, right? So today we have 4 lines of business that we do. We have our acquisition business where we acquire B and C type assets. We have development, ground up development and adaptive reuse of apartment buildings. We have a blind pool fund that acquires net lease assets. So think of Dollar General, Dollar Tree, Walgreens, things like that. And we also have a media and education business where we help people get into the real estate space, right? Which again, whenever there's a turn like this in the economy, it's a great place for you to learn how to not only underwrite deals and put deals together, but also network with other individuals so you can build success with a team, with a group, as opposed to doing it alone, right? You don't have to do it alone. And that's why we put together a mastermind. We have a 50-week mastermind that goes through and helps you underwrite deals, put deals together, understand if they work or not, the whole 9 yards, right? Everything that we do in our masterminds anyway can be applicable to any market. We're not doing any crazy type thing where we're taking a bit of your deal or whatever. We don't do any of that stuff. All right. It's good old fashioned training you how to do a good deal and not overpay for it. Simple as that. It's quite simple. So that's what we do, and that's what we want to help people do. So if you're interested in doing that, check out the multifamilyaccelerator.com and check it out. Check out the video there and read about it. Okay. If you're interested, either you can message on the website there, or just leave a comment. If you're watching the replay, leave a comment below, and we'll reach back out to you. Okay. So if you're ready, let's go ahead and do this. All right. So first thing, residential real estate. Okay. Let's talk about that. The market got absolutely clobbered over the past, I'd say the last year, and it made for a perfect storm of factors. We got this, 2 years ago, we had record low interest rates, working from home flexibility, really fueled a buying frenzy that drove prices to unprecedented levels. It was crazy how high the pricing was for some of these houses. The median home income soared over 20% year over year, like 2 years ago, right? Year over year, between 2020 and 2021. Now, at the same time, housing inventory, really hit bottom. So we had this demand outpacing supply, and we ended up with a very, very competitive market. So competitive, in fact, the market was just going crazy. Never seen anything like it. Even back before, leading up to the 2008 crash, I was buying stuff back then. It was crazy back then. It was way crazier this most recent time, right? Now, the Fed had to step in with inflation because it was just out of control. They rapidly raised interest rates, okay, from near zero to over 5% in just a matter of months. Okay, so if there's any way to slam on the brakes on an economy, that is how you do it. Okay, so that's what they did. They slammed the brakes on, and everything in the housing market pretty much, stopped. Right, affordability plummeted, demand cratered, and now home prices and sales as well, they've really stopped. Now, what does that mean for real estate investors in 2024? Okay, first, I think we're going to expect to see home prices continue to decline over the next 6 to 12 months. We're already seeing 5 to 10% drops in various markets across the country, and again, this is a case where I've seen where many of our students will bring deals into the mastermind, and we see it. Like, we see the drops coming in. Secondly, inventory will steadily rise. As the market softens and more homeowners list their properties, we're going to see this rise take place. Now, this influx of supply will help temper the price drops. Okay, and of course, keep in mind these are folks that are not homeowners, maybe they're investors, okay, and they're already paying high interest rates as it is. And third, buyer demand will weaken because of these high mortgage rates, and because there's a recession looming, and people can see it. They can see it coming, right? Most people do. They're going to keep many potential buyers on the sideline. Again, with a recession coming, we know that whenever that happens, job losses and other terrible things happen to many, many families out there. Okay. Fourth, distressed properties will increase. Now, financial hardships from job losses and inflation is going to force homeowners into foreclosure, and possibly, hopefully, they're able to work out deals with these lenders. And some lenders will do it, some lenders won't. Right. So that's going to happen too. Fifth, cash will be king. All cash offers will have a significant edge over financed bids. So liquidity is paramount right now in uncertain times. So for anyone looking to invest in residential real estate in 2024, here are some tips, okay? Focus on markets where there's a strong population, strong job growth. So avoid stagnant areas. Like if you think of like tertiary markets. There's primary, secondary, and tertiary markets. If you're not sure what that is, there's other videos that we've done. We've covered that specifically on the YouTube channel, right? So it's bulletproofcashflow.com/bulletproofcashflow. Check it out. We've got almost 800 videos there right now of various content all about real estate. So definitely check it out, all right? Where we talk about these things. So just search for it. I do a deeper dive, but primary market would be a big city, secondary would typically be the outskirts, and the third would be even further out than that, smaller towns. Okay, what else? Target undervalued properties. Okay, you're not looking for overpriced homes. You're looking for motivated sellers that have a reason to leave. Maybe they have to take a job out of state, they have to move across town, whatever. They don't want to have to carry a second house, a second mortgage, right? So they're motivated to get rid of the property. So you're looking for motivated people. If you're able to make all cash buyers to maximize the chances of winning, do it. Because like I said a second ago, all cash is kings. That's the thing. Now, what else is there? Distressed properties, like short sales and foreclosures. You can typically get that from a bank. And the way that works is establishing relationships directly with the lender, maybe your local bank or local credit union. Start making contact with them, position yourself as an investor with access to capital to buy these assets from these lenders. That's a great way to get started and get into the deal, right? What else is there? Partnering with other investors to purchase larger multifamily properties, because it's not just the residential side, 1 to 4 units that's experience issues, even some of the commercial stuff too, 5 units or more. A lot of guys back during leading up to 2020, I mean, they were way overpaying for deals. I still see it now. I still get the listings, and I still see people overpaying for stuff, right? So they're going to feel the pinch. I'll tell you that. Something else, though, something that we've done historically, and I would love to suggest to you, is to employ a buy and hold strategy. Try to lock in a good price with a decent rate. Okay. And these days, I mean, if you're going to get it from a lender, like a bank, you're talking 8%. If you're going to get hard money, it'll probably be 12 to 15. So obviously if you're going to do something like that, refinance, look for an opportunity to refinance after you build up value there. Right. But it has to cash flow from day one. The intent here is for you not to get hurt carrying an asset for too long. Okay. Which leads me to renovating the property, make sure it looks good. Make sure that the asset looks good, good enough that you can eventually do a refi, or maybe even sell it if you have to. But ultimately you're selling it for more value, for a higher price than what you bought it for, right? That's always the game here. But you're looking to create value, hang on to a property long term, and cash flow the deal, right? The buy and hold strategy is something that I personally like to do, just because I'm not in the mode of buying, fixing it up and then unloading it, and then just you could do that. Nothing wrong with that. Nothing wrong with doing that to build cash. Absolutely do it. Do whatever it takes to build that cash. But ultimately, the intent when you're doing any type of real estate is buy and hold strategy, my opinion, anyway. So I think the residential market will present challenges through 2024, but shrewd investors who play their cards right can absolutely prosper in this climate. They can, okay? Now, what about the commercial? What about commercial side? Well, similar to residential, commercial is, they boomed tremendously, even through the pandemic, because again, the money was still fairly low priced, right? The cost of money was cheap. And believe it or not, commercial deals are actually a little bit easier to finance than residential deals. You might be thinking, why is that? Well, there's way fewer rules around commercial than there are around residential. Residential, there's many set rules in place to protect homeowners and protect consumers, where we don't really have those types of things on the commercial side. Okay, so it's different policies between these two types of loans. So now that rates are surging, this segment, the commercial segment, faces immense headwinds. So certain property types will fare better than others. All right, retail, e-commerce still continues to beat the hell out of some of these retailers, right? And retail real estate will continue struggling depending on what type of asset it is, right? We like to target specifically on Amazon proof or Walmart proof type of deals. That's the type of things that we do, like animal hospitals. Like no matter what, for many, many people, their pet at home, their dog, their cat, whatever the pet they have is like a member of their family. They're not going to take the member of the family to Walmart to have their surgeon look at it, right? It's not going to happen. So that's why we like those types of stores, those types of locations. Dollar General, Dollar Tree, those types of scenarios too are easy, get in, get out. It's very much easier than Walmart, and it's immediate that you can't get from Amazon, right? What else? Office. The work from home revolution triggered this massive pullback on office, right? So many, many, many more people are working from home. I know that for the most part, a lot of people are going back into the office, but it's not even anything close to what it was from 2020, right? It's not even close to anything from 2020. So vacancies are up, rents are down, and there's developers like myself included that if we could find good deals on office and do some sort of conversion, if there's an opportunity to do it, we'll do it, right? Now, multifamily, however, is still a very bright spot in the housing market because demand remains fairly strong for apartments. Now, typically, whenever the market softens, we do see rents kind of, stabilize leading up to 2020. They're jumping up tremendously quickly, even past 2020. But now they've somewhat stabilized at those new air quote higher rates, right? So if you owned any of this stuff before 2020 and now you own it today, you conceivably should have higher rents today than you did before, right? And that's leading to an inflationary pressure and a whole bunch of has to do mainly to do with money printing and the value of the dollar going down. But that's a whole other discussion, right? What else is there? Industrial, okay, warehouses, distribution centers. They're benefiting from the logistics boom, right? So online shoppers are still very, very busy buying stuff online. You have Amazon out there still doing their thing, and other online folks are still pushing their wares on the internet. Right? So commercial real estate investors should really emphasize multifamily and industrial. Those two are still the strongest segments in 2024. Now, within these sectors, here are some tips for coming out ahead. So target Class B and Class C over Class A. They typically have better returns. I personally like Class B assets because you get a mix of value and decent tenants living in there because let's face it, it's landlords have been getting a bad rap since 2020, and the Class C tenants are a little tougher to deal with when it comes to underwriting, right? So just be aware of that. So Class B assets, in my opinion, are slightly better than Class C, and Class A is overpriced, so very hard to make a deal work. But what you're trying to do is the formula is still the same. You're still trying to find discounted properties with some potential upside by doing some renovation, some other type of value add. Focus on locations. Again, population, job growth, wage growth, all those things are always, that's a constant in this business. You're always looking for that. And for multifamily, choose affordable mid-market rents over luxury units, like I said a second ago. And you don't really want to be at the top of the market. You don't want to be the most expensive. Like when you're looking at these assets, you don't want someone at the top of the market, but you don't want the one at the lowest either, unless you know they can do the repairs and pull that asset up in terms of valuation, okay? But in any case, this business is not one you do by yourself. So it's always good to partner with experienced operators, and they have great property management online and ready to go. Okay, and the same thing applies here. You're holding on for long term. If you're able to get some decent rates from doing agency debt, great. That's the way you do it, right? But really, the commercial real estate wave that was happening leading up to even into 2021 to some extent, it's over, right? It's pretty much done. But by applying a contrarian approach, there's still many gems out there. And I think that getting agency debt, if you're able to do it, is a great way to get the reasonable cost of debt on the asset. And if you can't do it yourself, partner up with someone who has, because I think that's a great way to get into a deal and help someone else, have them help you, right? So you both get into a deal too. So let's get into some things to avoid. Because up until this point, we've discussed very smart strategies that investors can employ in 2024. So what do you stay away from? All right. So here's some critical mistakes that you should sidestep in 2024. Don't try to time the market perfectly to invest for the long term. Okay, you're still basing it on fundamentals, and if the numbers make sense in front of you right now, and you can lock in long-term debt, that's the right way to do it. Because you know what? You don't know what things are going to happen in 2 years from now, 3 years, 4 years, 5 years from now, right? If you're holding on to the asset for that long, it's very hard to predict, right? So you're making your best decision today with the best debt you could possibly find, and if it is, then you work out a deal specific to that asset. Okay, there's various ways of doing that. Like I said before. But you know what? You can check out themultifamilyadvantage.com. Check that out, and if you're interested in learning, like, how do you build those sorts of deals, right? We show people how to do that kind of stuff. All right. Another constant here is never over leverage. Okay, don't use excessive leverage. Lower LTVs, loan to value, they provide a safety margin against falling values of property. And chances are, in the short term, maybe you do lose some value on the property, but really it's all on paper. You don't actually lose the money until something happens, you have to sell the asset or whatever, right? So, the key is not to overpay for it, right? Which leads me to the next item here. Don't overpay for it. The price is absolutely paramount. Brokers are still out there. They're still trying to peddle some of these deals, which are clearly insane. No offense to my broker friends out there, but you know what? It's one of those things that you have to underwrite it and stick to your principles that you build as you learn how to underwrite deals. Okay, there's certain things you look for, and those are what you have to focus on. Another thing is, don't chase yield without regard to risk. Higher returns require meticulous analysis. This is why we have a net lease fund, right? It has a monthly return, steady income, corporate guaranteed, corporate backed leases, or franchisee backed leases. So no matter what happens in the market, these assets, this fund always performs. It's great. The cool thing is that it's not impacted by what goes on in the commercial space. It's just not. But the yield is much smaller. But it's a risk-adjusted return. So that's okay. It's okay if you know that that check's going to come in every single month at the same time. It's worth a lot of money to a family that needs it, especially, right? So it's a great way to get into a fund and really get that regular income. Now, if you're looking to learn more about that, go to guide2netlease.com. Check out that ebook. It's a free ebook. Go ahead, download it. Right, it's pretty comprehensive. I talk a great deal about net lease and what it is and how you can use it as part of your portfolio. Okay. The thing that I see most people do is they invest in unfamiliar markets. Okay, I spoke about this in a previous webinar too. Having knowledge about your market is absolutely imperative. Focus on one market, learn that market like as much as you can. Okay, and you're able to do great things if you know the market and the market knows you. That's even better, right? Don't buy an emotion. Don't fall in love with the property. Okay, the property won't love you back. I guarantee you the property will not love you back, right? So remain objective and, just base it off of what you see in front of you, okay? And whatever you do, don't forget expenses and vacancies, okay? Build conservative assumptions into your acquisitions. And, really try to protect yourself against other cycles that might be coming up down the road, right? We know that cycles occur every 8 to 10 years, something like that, So position yourself to capture any type of events as you look down the road even further than where we are today, okay? The one big thing that I often talk about is not doing this alone. Get a great attorney, a great CPA, a great accountant, a financial operator, if you can, a partner that's done this before, right? Don't do this yourself. A great property manager. Definitely get a great property manager, right? This is an exhaustive list, okay? There's another book, Guide to Brokers, actually, where I go through and I list out all these things and where you should start. That's free too. So guidetobrokers.com, check it out. Go ahead and grab it, okay? It's really geared to finding a broker, which you're also going to need, of course. But before you even talk to a broker, you're creating a list of individuals that you're going to need on your team. So by the time you reach out to the broker, you have a credible list of team members that will back you up on your goal to build your portfolio, okay? So this is not an exhaustive list here, right? But these are some of the major pitfalls that'll help you make smart moves in 2024, okay? So, definitely focus on these and get those resources. They're completely free. Grab them, okay? Okay, so I want to leave you with some final tips to crush it in 2024, okay? First, build a war chest of capital, okay? Market turmoil will bring bargains. Be ready to deploy some dry powder. What does that look like? If it depends on where you are in your personal life, saving up cash, setting it aside, maybe less dinners out. Just focus on saving as much money as you can so you can get ready to deploy that money into a deal. Okay, there are plenty of deals coming, and this means that try to cut expenses, unnecessary expenses that you don't really need to spend right now, and set it aside. What else? Expanding your network. Number 2, relationships drive the opportunities that you find. So you have to surround yourself with smart people, okay? And especially today, if you haven't done it already, start going to events, start going to networking events, and surround yourself with other folks, right? As a matter of fact, we have some online events that are going to be coming up here very, very soon, and we're going to also present opportunities for people to talk about what they are looking for in real estate too. So keep an eye out for that. We'll be talking more about that, okay? What else? Number 3, sharpen your negotiating skills, okay? Flexibility and creativity will win deals because it's not as always as simple as just going to a bank and getting a loan. There's creative ways of putting deals together too. And again, if you check out some of the most recent webinars leading up to this one, I talk a great deal about using creative financing and other methodologies to apply to take down deals, okay? 4, master the ability to value properties, underwriting deals, okay? You have to know a good deal from a bad deal. And like I said, the multifamilyadvantage.com, check it out, okay? I'm telling you, by learning how to underwrite deals, you're going to be in a way better position than not, okay? 5, keep underwriting. Number 5, keep upgrading your real estate education. Knowledge fuels effective strategies. 6, exhibit patience, okay? This is probably the biggest thing that many, especially I see this in new students too, they get all excited about taking down the first deal. You have to be patient and you have to apply discipline. Don't get fearful, don't get greedy, okay? It could lead you into bad decisions. We're always trying to find a good, strong deal. If you can't find it, dump it. There's more out there, all right? Some of our students have looked at hundreds of deals, right? So before they found one. And that's normal. That's what it is, right? So the deal has to fit you. You have to be okay with the deal. 7, take very prudent risks, okay? Right now, where we are in the economic cycle, there's a lot of opportunity, but that opportunity is there. Because again, someone either overpaid for a deal, they got in over the head, whatever the case may be. You don't want to put yourself in that situation too. Okay, deals move slower today than they did back then. That means that maybe someone bought a property at $1 million and it quickly jumped up to 1.2, then 1.3, then 1.4. Well, you're not going to see that right now in this economic cycle. So it's okay to step out of your comfort zone, but be calculated and intelligent about it. Okay. Number 8, maintain a long-term perspective. Okay. Cycles come and go. Ride out the storms. That's why I'm always about long-term deal making, right? Hanging on to the deal for the long term. Number 9, learn from past downturns. Okay. Apply those lessons and study the markets. Right? There's been plenty of downturns. You know, it's funny because the downturns are always they're always similar in nature. They have this very same sort of I think what's the saying there? The song is always different, but it still kind of rhymes or something, right? It's exactly it. You know, so there's always something you can learn from what was done before, and you can apply it to deals today. But you know, the biggest thing you can do is remain optimistic. Real estate has created wealth, immense wealth, for many, many, many people. You know, the best times truly are ahead of us. Even if you're listening to this and you're going through some bad times right now, maybe you own real estate yourself and things kind of suck. Fight your way through it. Work with the lender, okay? The lender does not want to take back the property, believe it or not. They don't, right? If you work out a deal with the lender, you're able to hang on to the property, get through it, okay? You'll come out much stronger when you do. All right, so there you have it, folks. It's a blueprint for securing real estate success in 2024. Like I said, the current economy represents major challenges. We know that. But embedded within this turmoil is a lot of opportunity. So consider the strategies that I outlined here today. Okay, avoid those critical mistakes. Hang on to a winning mindset. Okay, and your real estate investment dreams can come true. All right. So thanks again for your time. Greatly appreciate it. Again, if you're watching the replay here on YouTube, you made it this far, do me a favor, if you would. Hit that subscribe button. Give me some love. All right. Give me a like. Tell me you like the stuff and you get some value out of this. Okay. Greatly appreciate it. And by the way, leave a comment if you have questions, whatever, please do. If there's something you want to see specifically me cover, go ahead and put it in the comments too. Okay. Thanks so much for tuning in, guys. I will see you next time.